Hey there, traders. Ever wondered why currency pairs move the way they do? Well, you're in the right place. Today, we're breaking down the key factors that affect currency pair movements. It might sound complicated, but trust me, by the end of this video, you'll see things a lot clearer. Ready? Let's get started. First up, interest rate differentials. I know it sounds a bit dry, but stay with me. Central banks set interest rates, and when there's a difference between the rates of two countries, it creates a flow of investment. Imagine you could get higher interest just by moving your money to another country. That's what big institutions do. The higher the rate, the more attractive that currency becomes. So if the US Federal Reserve raises interest rates while the European Central Bank keeps theirs low, you'll see investors rush toward the US dollar. That demand? It drives up the value of the USD compared to the euro. And voila, currency pair movement. Next on the list, economic data and events. This one's a biggie. We're talking GDP reports, inflation data, and employment numbers. They give us a snapshot of how a country's economy is performing, which in turn influences the value of its currency. Imagine getting a report saying the US economy is booming. Traders will expect that to lead to future interest rate hikes, which means, you guessed it, the US dollar could strengthen. On the flip side, weak data? Not so great for the currency. Then we have political stability. A country with a stable government is like a safe bet for investors. If everything's running smoothly, investors feel confident putting their money into that country's currency. But when things get shaky, like during elections or political turmoil, investors get spooked. For example, Brexit sent the British pound on a roller coaster ride because, let's be honest, no one knew what was going to happen. Political uncertainty means less confidence, and that can make a currency lose value fast. Let's not forget about commodities. If you've ever wondered why certain currencies seem to move with the price of gold or oil, well, there's a reason for that. Countries that are major exporters of commodities, like Australia with gold or Canada with oil, are directly influenced by changes in commodity prices. When commodity prices rise, currencies from these countries tend to strengthen because there's more demand for their exports. But if prices drop, the reverse happens. For instance, if oil prices fall, the Canadian dollar often weakens since oil is a big part of Canada's export economy. So next time you see commodity prices moving, keep an eye on the currencies that are tied to them. Now let's talk about market sentiment. Sometimes it's not just the numbers or data, it's the vibe of the market. When traders feel optimistic, they flock to riskier currencies like the Aussie dollar or the British pound. But when fear takes over, they run to safe havens like the US dollar or the Japanese yen. Market sentiment can swing currency values just as much as any economic report. It's a good reminder that psychology plays a big role in currency movements. Finally, let's cover trade balances and economic policy. When a country exports more than it imports, it's good news for its currency. More demand for goods equals more demand for that country's currency. However, trade policies can throw a curveball. If a government imposes tariffs or sanctions, it changes the flow of goods and currency. That can lead to fluctuations in currency values, so it's important to keep an eye on the policy decisions that affect trade. And there you have it. Interest rates, economic data, political stability, commodity prices, market sentiment, trade balances, all of these factors play a role in how currency pairs move. It's a lot, but once you get the hang of it, you'll see the bigger picture.
Check out more resources at finvaru.com, where we have everything from detailed guides to advanced strategies. Don't forget to hit like, subscribe, and tap the notification bell so you don't miss out on our latest videos. Thanks for watching, and here's to your Forex success.